If you've been thinking about adding a home equity line of credit to your mortgage and your bank told you it's going to be treated as a full refinance, let's slow down for a second, because what they told you is technically true, but it's not the full picture. Here's what happens. You call your bank, you ask about adding a line of credit to your property, they run the numbers and they confirm that you have enough equity, and then they say, yes, we can do this, but it's going to be treated as a full refinance. Now, what does that actually mean? A refinance is a brand new application. There's a new qualification process, and essentially it's as if the bank's getting a new mortgage. And the rates, the refinance rates in Canada are higher than renewal or transfer rates. We're talking anywhere between 1/4 to 0.5% higher, sometimes more, depending on your lender. On a $600,000 mortgage, even a 1/4 point difference is $1,500 a year. Over a 5-year term, that's $7,500 extra, just because your bank only has one tool in their toolbox. Now, here's what a lot of people don't tell you. There's another way to get that line of credit, and it doesn't start with a refinance. Here's the strategy. Step 1, a broker finds a lender that will transfer your existing mortgage, not refinance it, but transfer it. That's a critical difference. Step 2, if your mortgage qualifies, you get transfer pricing, the same best rates that you'd see on a normal renewal, not refinance rates. Step 3, once your mortgage has been transferred to the new lender, we can then add a line of credit component simultaneously or a little bit after. This is the same outcome that you were trying to get with your bank, but you get a better rate. Now, here's the key question that most people don't think to answer. Why doesn't your bank offer this? Well, the reality of the situation is the people internally get compensated more if they do it as a straight refinance than if they would in this manner. And some banks, their systems don't allow them to do it in this manner. They would have to just do it as a refinance. And a broker isn't tied to one lender. And again, since not all lenders are able to do this, there are some lenders that can. A broker will be able to identify a lender that can do this and do it in the manner that is going to save you the most money. But here's where it gets better, and most people don't realize any of this is possible. First, the amortization reset. Now, if you started with a 25-year amortization and you're now at 20 years, and you'd like to go back to the 25 years to help with your payment to get it a little bit lower, since interest rates are higher than when you got this mortgage 5 years ago, let's say, the new lender can actually reset back to your original amortization of 25 years without any costs or any difference to the rate that you're being offered. Your monthly payment would go down, but again, you didn't refinance, you just got the lower payments as part of the transfer. So second is the cost. The new lender typically will cover your legal fees and appraisal costs as part of this deal. Your out-of-pocket expense on this process is near zero in most cases. So let's be clear about what we're comparing here. Your bank's option, higher refinance rates, no amortization reset, you're paying your own legal fees. Of course, there is a caveat to mention here. If you're doing a refinance with your existing lender, you will have the ability to go to a 30-year amortization because you're doing a refinance, assuming you are able to, but then you're getting higher rates essentially, right? So the broker option is you first would transfer in at best rates, potential reset of the amortization, lower monthly payments due to this, and your costs would be covered. And on top of that, you get that line of credit. So it's the same line of credit that you're after in the first place, but it's a very different deal. Now, I want to be honest with you here because this doesn't work for everyone, and this is the part that most people skip over. The first objection that I get is, won't switching lenders hurt my credit score? Yes, there's a hard inquiry when a new lender pulls your credit, or when we pull your credit and share that with a new lender. That's real, but here's what most people don't understand about how that actually affects you. A single mortgage transfer will typically move your score by 5 to 10 points temporarily. It recovers within 90 days in most cases. Meanwhile, the rate savings on a $600,000 mortgage over a 5-year term is potentially thousands of dollars. You're trading a temporary cosmetic dip in your credit score for a real measurable reduction in what you're paying the bank. That's not a difficult trade-off when you actually look at the numbers. The second objection that I get is, I'm midterm. Won't there be a penalty to break my mortgage? This one has more of an impact. This one matters more. And it's the right question to ask, because if you're midterm, your lender may charge a prepayment penalty to exit. Sometimes that penalty is worth absorbing, however, especially if you're sitting on a high fixed rate or the savings on the transfer, they're large enough to recover the penalty within year one or maybe halfway through year two. Sometimes it's not worth it and you wait until renewal. The answer isn't a blanket yes or no. What a broker does is run those exact numbers for you, penalty versus savings, so you know what the math looks like before you commit to anything. You're making a decision with full information instead of guessing. Now, one more thing about these penalties. There are times throughout the term of your mortgage where the penalties are not going to be in line with where they should be. For instance, if you've got a massive savings and the penalty is including that penalty, let's say the penalty is 3 months interest when it should be an interest rate differential calculation or an IRD. We'll cover that in another video. But essentially the penalty could be way less, then it might be the opportune time to refinance this mortgage at that point in time. The third objection that I see is, I've been with my bank for 20 years. Why would I leave? Now, I hear this one a lot, and here's the honest answer. Your relationship with your bank, it's a real relationship, but it doesn't change their rate structure or what they're able to offer you. Loyalty doesn't get you a better price on a refinance. That's just not how their pricing works. Going to a broker doesn't mean that you're walking away from your bank. You can keep your checking account, your credit cards, your day-to-day banking exactly where it is. You're just getting your mortgage from a lender who had to compete for your business. That's the only difference. And in all honesty, especially in today's day and age, you don't want all of your business with the same institution. You don't really even want your checking account and your mortgage to be with the same institution. And again, this is another video for another time. But in short, the way that most lenders register mortgages, they put you at risk without even knowing. Your house becomes security for everything that you have with that lender. The equity that you have is on the line for that line of credit, even if it's unsecured for that personal loan or that car loan. Again, we'll dive into this in another video, but the gist of it is, you do want to keep your finances separate from your banking. And it's actually to your advantage, not only for that, but if they already have your share of wallet, then you're no longer profitable for them and there's nothing that they can bring in, so they can't offer you incentives on other side, right, on other things. Moving along, so now whether or not this makes sense and who this is for, well, this is a personal decision, and I'd have to walk through the details for your specific situation. You need enough equity in the property. Your mortgage needs to qualify for a transfer, and the timing needs to make sense relative to where you are in your term. Not everyone's a fit, but a lot of people are, and they never knew this option existed because their bank, they never bring it up. Now, if you want to find out whether your mortgage qualifies for a transfer instead of a refinance, book a consultation and I'll walk you through it. There's no obligation. We're just trying to provide a clear picture of what your options actually are. I'm Aleem from the Mortgage Free Faster channel. Let's cut through the noise and let's build a real plan that works for you.